How has a company come onto your radar and at what stage of their life is that? Where do you find like a company that's small and you say, boom, that's going to be the next one? How does that process work?
Yeah, so I generally skip the mid cap and small cap companies. So 10 billion plus, but generally more like 20 billion plus. And the reason for that is look, like you could pull up the Morningstar charts. And the reason for that to me is stock-based compensation when you get talk about these more technology-oriented companies, where the smaller companies seem like they're giving away 30% of revenue in stock-based compensation. And that does not leave a lot of upside for investors. You get to a company like Google, or I mean, look, that doesn't have to be as big as Google. It could be a smaller one like Toast. But when you've got stock based compensation in the single digit percentage points and they're doing buybacks that are bigger than the stock based compensation, you're talking about the shares are shrinking. Like they're shrinking, they're always going down. So the ownership's being concentrated. It's the exact opposite of being diluted by enormous amounts every year. There's some like a lot of people think like, oh, because it's smaller, it must have more growth potential. But it doesn't matter when their company's being diluted by more than it's growing at. So basically, large cap profitable.